Friday. What a beautiful spring day that we've got today, and I know we're all appreciating that and appreciating the Cooperative Extension folks for providing this opportunity for us to get together and have a discussion about market action. Thank you very much for that, and certainly on behalf of Virginia Farm Bureau, thank you as well. As the world is really in a battle right now, fighting this COVID-19 issue and the coronavirus that causes it. We've seen this building and escalating really since the third week of December, when most people, myself included, that was as earliest time that we heard of this virus and what it was doing to some communities, particular one city in China. And it seems like since that time, the speculators and the world markets, whichever one you want to look at, equity, energy, commodities, all of them started planning for the worst case scenario and started selling futures contracts instead of buying them. Remember, anytime question marks get into a futures market that's trying to predict the future, it raises fear, and most of the time when the fear gets into the market, it turns into selling, and it turns into lower prices, and we've certainly seen that. It's been an encouragement to me talking with you all, Extension and the producers, the last few weeks, just knowing and being reminded that you all really do enjoy what you do, even in the middle of circumstances that are very difficult, outside influences that are very difficult. And it's been an encouragement to me to hear that y'all are focusing on the details, trying to make all the decisions you've got to make, and you've got a lot of directions to go in and a lot to do. And I've really seen a lot of folks teach me and talk about looking for opportunities, and they do exist right now. I've definitely heard a number of you who've locked in a lot of your fuel purchases for the year. You've locked in a lot of your fertilizer needs for the year. I've heard a lot of folks talk about the big benefit of refinancing any debt that they had. So those are just some of the opportunities, and that's what we've got to continue to do going forward, is work on controlling what we can control in the field and focusing on opportunities we can find. And y'all are doing that, and congratulations for that in this atmosphere. When we think about the futures part of your cash price, and we look at what's been influencing these prices for particularly corn, wheat, and beans over the last few months, we came into the year in January with a lot of optimism. Speculators were long futures. We were totally focused on a trade deal getting done and China being on the clock to having to purchase $40 billion in ag products by the end of the calendar year. And about the time that deal got signed in the middle of January, the last time a lot of us that met together, we saw the speculator change their opinion and go from optimistic to pessimistic. And instead of being long futures, they turned into being short or sold futures when they found out that the deal wasn't going to go into effect until February and that it didn't have any details in it. And then that pessimism transferred over to the COVID-19 and the coronavirus, as it really shut down, as we all know, world communities and world economies. And that in turn has, in some instances, created demand destruction. And in some instances, it's created increased demand. Let's take, from the futures part of your price, let's take corn first and really look at probably in my opinion, the largest headwind that corn futures have ever had to face, and that's going to be the issues with the ethanol industry. Depending on which numbers you look at, they're all correct. It's just they look at the scene or the situation a little bit differently, whether it's USDA numbers or private industry numbers. About 35% of the nation's corn goes to ethanol production. And it's been about 2 weeks ago now, 2 weeks ago Tuesday, because of lack of demand for crude oil and all of its co-products, everything that comes from crude oil, its derivatives, is those markets have really crashed, to put it mildly, because of lack of demand. It brought ethanol futures down to the lowest price on the board they had ever been. 2 weeks ago, Tuesday, we started seeing multiple ethanol plants go no bid in the Corn Belt, shut their gates. As of last Friday, 20%, roughly 20% of America's ethanol production was offline, with more plants closing this week and more will be closing in the future, as they just can't make a profit making ethanol right now. We've also seen some strange interactions with ethanol futures being more valuable now than gasoline futures. That shouldn't be that way. No blender would blend ethanol into gasoline above the federal mandate if ethanol is going to stay higher at about 82 cents a gallon on the futures board, higher than gasoline, which I think we closed yesterday at about 54 cents a gallon on the futures board. So a big headwind for corn. That's going to be bearish corn for a long time as these ethanol plants stay offline. And even yesterday with the weekly EIA report coming from the ethanol industry, we saw record stocks of ethanol at the same time that we saw the weekly grind just really go down, and that's certainly bearish price. When you switch gears from corn to soybeans, certainly a lot of people in the last 20 years with ethanol increasing in the plants making a lot of dry distiller grains or DDGs, it's been a wonderful co-product, and people who feed chickens and turkeys and hogs and cattle have really used that as a protein source, as y'all know, in their rations. You can't find DDGs now, and what has happened is a rally in soybean meal. Y'all heard me say that before. We got to watch what soybean meal futures are doing to try to determine a direction for soybean futures. We've seen a significant rally in soybean meal futures that has carried soybean futures up off of those multi-year lows that we made 3 weeks ago on the soybean board. So with meal demand increasing because of the lack of DDGs, because of the ethanol plants shutting down, we have seen some opportunities come into price, old crop, and even for some folks, some new crop soybeans. When we switch a gear again and go to wheat, we've definitely seen global demand for wheat increase over fears of the virus and COVID-19. We've also seen, for instance, Egypt, the world's largest wheat importer, pull its inspectors out of the Ukraine, one of our top competitors for wheat on the global wheat trade. We've seen Russia, as late as last week, their ag ministry announced that they're going to be limiting wheat exports and trying to sell that wheat domestically as fears over food grow. We know all of what y'all grow, corn, wheat, and beans, ends up on everybody's dinner table, but wheat ends up on their dinner table as wheat, and it gets a little bit more influenced by fears of food shortages. Even though there is no shortage of wheat in the world, it's just become an issue of where countries can load. That's another issue that the virus has caused many ports around the world to issue stop load orders, and vessels aren't able to get in. And America just has really shined here in the last few weeks, keeping our ports open and looking like the most reliable source for wheat in the world. And when we hit the highs, the recent highs here several days ago on the futures market, wheat was about 70 cents a bushel higher than we were 3 weeks ago. So a nice rally in wheat, a nice rally in beans as a reaction to the virus. Thinking about the basis part of your cash price, this situation with ethanol, as plants have closed in the Corn Belt and country elevators, in some instances have dropped their basis 50 cents a bushel for old crop corn. We're seeing we're seeing opportunities, say, for the Harrisonburg market, the buyers who buy corn for those feed mills. We're seeing opportunities for them to be able to buy the corn cheaper in Ohio and Indiana. We're also seeing rail freight rates come down as well. So what does that mean for us? That means we probably have some negative pressure coming on local basis for corn. Now keep that in the back of your mind. When you look at beans, from a basis perspective, we've actually seen basis bids increase over the last several months for beans as optimism over the trade deal was coming, as well as this phenomenal container market that's developed for soybeans here in Virginia, in Pennsylvania, and Maryland, and North Carolina, and in South Carolina over the last 5 years. And this container market has really helped keep up the demand for the beans you produce and keep basis values strong. We've even seen bean basis increase this week, so that's very positive. Wheat basis, old crop and new crop, is pretty much, the way I see it, status quo. We know, interestingly enough, over the last 10 years, we've seen basis for wheat be the highest of the year at harvest time. You all have seen that, know that, appreciate that. It's very opposite from corn and soybeans, where we normally see the lowest basis values of the year at harvest. We've seen recently, in recent years, the highest basis values for wheat come at harvest time. We're hoping for that again this year. One thing to keep in mind, we have seen 3 flour mills shut down, 2 in Pennsylvania and 1 in Maryland since last harvest. And there's a little bit of anxiety for me around our 2 wheat mills in Virginia and what the buyers and country elevators will, if we'll get back to those high harvest time basis values in the absence of these 3 mills. So saying all of that, a lot of influences on your futures price, a lot of influences on your basis price. It all comes back to keeping your mind's eye on the details in the field, what you're doing every day, and keeping your mind's eye on what your cost of production is. So saying that, old crop marketing, if we're going to talk specifically about marketing right now, those bushels, whether you've got on an NPE contract, a basis contract, whether you've got bushels in the bin that aren't attached to any destination or any price associated with them whatsoever, my recommendation right now today is to do a real assessment of those remaining old crop bushels that you've got. We can market our old crop bushels with a lot more confidence because we know what our yield was. We know exactly what our cost of production was on those bushels. And the same reasoning is true now that was a year ago or 2 years ago, even when we weren't in this situation. If you can lock in a profit on old crop corn or old crop beans in the bin in this market environment, you want to do so. You want to make small, regular sales. And we know that from a marketing standpoint, not from a cash flow standpoint, but from a marketing standpoint, you've got until the 2nd week of July to pull the trigger on these old crop bushels. So kind of assess how many bushels you've got left. Look at the days that you have, the weeks from now till the 2nd week of July, and kind of divide it up in your mind logistically with trucks and shipping, and start making some regular sales. We are seeing extreme volatility. I mean, just look at yesterday. We came into a new quarter, a new month, and we get new money flow. We get new ideas when we enter a new month, a new week, a new quarter. And we really saw the speculators drive the markets lower yesterday off of news from President Trump in his press conference the day before, a very sobering press conference about we're not seeing the worst of this virus yet and the respiratory disease that it causes. So that got the market selling off yesterday. They were up in the overnight. Y'all are used to this kind of volatility now. It's becoming norm. Even in the corn, wheat, and bean markets, I know y'all have got your left eye on live cattle, feeder cattle, and hog futures markets, but boy, they're they're limit up, limit down, expanded limits. They're just really riding this thing. And that's another reason to make your old crop sales on a regular basis right now and in small increments. If the first thing I would say too about corn, if you're not at your break-even price, still consider locking in the basis. I'm very concerned with as much old crop that's out in the bin still around the countryside, across the whole state, that this corn has to go to the end user before the new crop comes. I think with rail values falling and basis falling in the Corn Belt, we've got more of a tendency for basis to fall between now and July than we do for it to rise. So I would highly encourage y'all to lock in a home for your corn, even if you don't price the futures, but lock in that home and lock in the basis, and consider call options. There are some opportunities if you're making cash sales right now and you still want upside potential. There are opportunities with call options, and call who you market your grain to and your beans to and talk to them about those call options and what the premium would be, or you can call me as well and we can talk through those. Going to new crop marketing, assess also what percentage you're priced on your new crop production for corn, wheat, and beans. Take a look at the futures plus basis minus freight and see if you are above break even with your expected yield. And certainly if you're above break even with futures and basis and freight put together on your cash price, I would feel very confident about being at least 20% priced right now on my new crop corn and beans. And remember, when you're thinking about new crop marketing and you're putting it on paper, divide it in your mind and on paper what bushels you have to move at harvest time, and then what bushels you're going to put in the bin. Spend your time right now, focus time on new crop marketing on those bushels that you have to move at harvest time. And if you're above break even with expected yield, I would feel very good to see you lock in 20% of that production. So we're definitely in a very bearish environment, especially for corn. Corn is facing a headwind that it hasn't faced before, with about 35% of the nation's corn going to ethanol. If we lose a lot of percentage of that until the demand for crude oil comes back, it's going to be hard for futures price to recover, barring some type of a North American weather disaster. Or on the positive side, if China has been buying a lot from us the last 2 weeks. You can look at the export sales report: cotton, pork, sorghum, wheat, soybeans, and corn. There's a hope out there with this break in the price that China will keep buying a lot of corn from the U.S., and that will make up for some of the bushels that we're losing for lack of ethanol grind. Your futures price, corn, wheat, and beans are definitely tied right now to the outside markets. When you have a day like yesterday where the Dow Jones Industrial Average was down about 4%, 1,000 points, it's going to be very hard going forward for our commodities to rally or to have any kind of positive price movement when the stock markets, the currency markets, and the energy markets are all negative. We have seen, speaking of the currency markets, we've seen the dollar in the last 2 weeks at 3 to 4 year highs. We've seen the dollar break significantly lower. That's obviously going to help us going forward. We need to be on the alert and looking out for details. Last Friday, when Congress and the President signed the rescue package, there's a lot of information out there about agriculture. What type of agriculture businesses are going to qualify for small business loans and small business grants. Some of you, I'm sure, are already more educated on that than I am, but keep your eye out for this rescue package. We know that the USDA, Sonny Perdue, we know that the Commodity Credit Corporation, I think it was $14 billion for farm aid going into Commodity Credit Corporation, and about $9 billion set aside separate from that for beef cattle producers, dairy producers, and specialty crop producers. So we'll have to see what happens there. Looking out, South American weather has been basically benign to futures price since they started planting in northern Brazil in mid-September. Still the same today. They're dry areas, they're wet areas, but all in all, we really haven't gotten an influence on your futures price that's positive or negative from South American weather. That hasn't changed. And when we look at North American planting, we saw numbers this week that Texas is 50% planted on their corn. I think Louisiana was just over 60. And when you look out, the 10 to 21 day weather model shows good planting weather ahead for most of the Corn Belt, and soil temperatures are where they're supposed to be. We got the quarterly stocks and intentional acre report out of the way this week. We definitely were all shocked by the 97 million acres of corn the American farmers said they intended to plant, but we know this survey was done the first 2 weeks of March, effective of March 1st. Corn has had about a 40-cent to 45-cent break in the futures price, and most traders, I don't think, believe that the American farmer is going to plant 97 million acres of corn this year because of the change in price. We won't get the actual planted number until June the 30th, but the stocks numbers this week were very friendly. The corn stocks, what was in the bin on March the 1st, the bean stocks and wheat all came in below expectation. That was obviously friendly to price, and I think most of the speculators just looked through the report because of all the negativity around lack of demand because the world economy shut down on the virus. So I guess I'm up on my time right there, and I'd be glad to listen and be a part of a discussion going forward, or try to answer any questions y'all might have.
All right, Robert, I appreciate it. Thank you for your time. I was just taking a look at the chat box here, and I don't see any comments from anyone in the chat box. So I guess at this point, if you have some questions or comments, I guess the best way to do this is we'll just open it up and unmute everyone. And if you have a question or comment, you could just ask it openly. When we unmute you on our end, I do think that you need to unmute on your end as well via your laptop or smartphone to be able to be heard. Robert, I do have a question here from Mike, and he says, what is the chance of an upcoming depression? Any talk of this you have heard?
Yeah, great question. I've seen one economist, and I'll see if I can pronounce this word correctly. You know, we and I think, Mike, you're talking about just a general overall economic depression across the whole economy. One economist said we called what happened at the end of the 1920s and for the next 30 years when we crawled out of that, the Great Depression. We called what happened in 2008 and what happened with the mortgage situation in the banks, the Great Recession. One economist is already calling this the Great what's the word I'm looking for? Cessation, like the Great Stoppage. And what we've seen, I never can get that word quite right, but the Great Cessation. We've seen world economies that have really developed into consumer-driven economies, where in most of the world, the first world, credit has been readily available and credit has been very cheap, and the consumer, the small businessman, and the corporate America folks have taken advantage of all that credit, spent it, used it, developed economies that are vibrant and growing. And when you pull every consumer out of a consumer-driven economy, like here in the U.S., there's really no playbook on how this is going to play out. There's no debate anymore. You know, for the first week or two that we got involved in this, people said, well, we're heading for a recession. We've seen equity markets correct as much as 30% off their highs earlier this year. For instance, where there are people pontificating that unemployment in the U.S. is going to go from 3% to above 30%. When you put all that together, Mike's question is true. There are people who are saying this was such a quick stoppage of everything that even with central bank monetary policy here, central bank monetary policy all over the world, with stimulus going into economies, that we could see an economic depression. Again, there's no playbook for this type of crash that we've seen where you take the consumer out of a consumer-driven economy. So I think everything is on the table. One thing we do know, when we look back at American history since the early 1900s and look at economic recessions and depressions, we have seen all of those times be a time where people in agricultural production had more profit and more profit potential. It seems like so often the general economy and the agricultural economy work opposite of each other. And I think maybe that's one thing, is we're all trying to make lemonade out of lemons and look for opportunities if the overall economy does get stuck in a recession or even a depression for a period of time, that there could be profit potential and growth potential in the ag sector.
All right, thanks, Robert. I don't see anything else in the chat at this time, so I guess we'll just go ahead and we are going to we got one more thing there. Okay. All right, I guess at this point, I'm gonna go ahead and unmute everybody. So if you wanna ask anything or facilitate some conversation, we'll just go ahead and do that. If you do have a lot of background noise where you are, if you could just mute yourself once I unmute you, to kind of drown some of that out, that'd be great. All right. All right, so everyone now is unmuted. So if you have any questions or comments you'd like to make. All right, I'm not hearing any questions, so I guess we'll have a last call of any questions or comments for Robert. All right, well, we appreciate everybody joining us today. Robert, thank you so much for your update, your words. I know that that's something that everybody really was concerned and wanted to know that information. So we appreciate you sharing that with us. Hopefully that'll be of a big benefit to the producers. We thank everybody for joining us. Thank you, Robert, for your time joining us. One thing I would like to mention before we let everyone go, this has been recorded, so it will be sent out via our email list to everyone. So if you have friends or folks that were not able to listen in today, we will send a recorded link out so you can listen to that at your leisure. We also, the other agents that I mentioned, Mike, Trent, Stephanie, and Laura, and myself, we're going to attempt to do this on a weekly basis, at least in the short term during all of this COVID-19 situation with everyone, so folks can get some updates. We hope to have different speakers and different topics each week. We're looking at doing this every Thursday morning at 9 a.m. So just be on the lookout for in the future for future meetings and opportunities to get more information and participate in these updates. So again, just want to thank everybody. Thank my fellow agents that helped with this. I'd like to thank Robert again for his time and participation, and thank you all for taking the time this morning to stop by and share this time and get this update with us. So just thank you to everyone for joining us. please stay safe. Please do what you can to protect yourselves and your families. We know everybody's going through a rough situation right now, so just do the best you can. If there's anything any of us can do for you on the extension side, please just let us know. Again, thanks, Robert. We appreciate you taking your time to share that with us this morning.
Glad to.
All right. Thank you, everyone. And we'll be sending out the recording as soon as possible. Thank you all for joining us.